In contrast to Bitcoin, Ethereum literally bring liquidity on the blockchain. And this is also the move that Blackrock made. And they had their liquidity fund that is literally investing heavily in US debts. They have that also launched on the Ethereum blockchain. And this was not also by mistake. It was calculated, because now that ETFs are approved, however, there are no staking capabilities yet for the ETFs, this fund literally offers you 5% that Ethereum would offer you, but it doesn't come from staking Ethereum, but rather it comes from purchasing US debts. And this is the next thing that they literally want to push forward in order to stabilize and manage US debts, like we discussed. But this is a whole different topic that we'll look at a different time. What we wanted to focus on and remain focused on is Ethereum, and how it was by design made that it shouldn't be able to be staked yet. However, it will bring a lot of liquidity on chain. And this is why this liquidity fund, like we just discussed by Blackrock, will promote and encourage these institutional investors that can stake ETH but can receive the same amount of APR interest, which is 5%. This is an alternative that is even considered safer, because like we know, cryptocurrencies are volatile, and after the bull market comes a bear market. And usually, like last bull cycle, Bitcoin literally lost 80% of its value after its peak during the bull market in 2021. So the institutions are aware of this, of course, and this is why it was a chess move for BlackRock to offer a much more stable approach, a more secure alternative to staking Ethereum, which is extremely volatile, especially after a bull market. So this will allow BlackRock to amass a lot of liquidity from these institutions, especially once they start taking profits before the bear market starts, and then deposit all of that into this Buidl token, which is literally purchasing US debt. And this will really change the game, how the market literally works. Because as of today, the way the market worked is, once the bull cycle ends, the bear cycle starts. And that means liquidity is being drained out of the economies. That's how it's always been so far. And this is all we've known so far. But now, with tokenized securities and this liquidity fund of BlackRock, it brings a whole different aspect to everything now. Because this means that once the bull market starts to end and all the liquidity now is being removed, profits is being taken by these institutions that have heavily invested hundreds of millions, if not billions, into cryptocurrencies. Now they'll be holding on to their cash, the fiat, right? And fiat is inflationary. So what other alternative will they have? And this is where Buidl's fund, liquidity fund, comes in. So after they've taken all the profits from the cryptocurrency, now instead of getting out of cryptocurrency, they can actually stay in there by purchasing Buidl tokens, which are literally shared interest, and they're earning this interest daily, but they're paid out monthly. So this is an alternative now that institutions, now that they can't stake Ethereum yet, they can actually purchase these US debts in the form of the Buidl token that is launched on the Ethereum blockchain, and still earn 5% that they would be earning through Ethereum anyway, but in a more stable manner, and that is not volatile. So all these things, like we were saying, is calculated. All these things were thought ahead of time and are set up to literally accumulate and amass as much liquidity as possible, because the end game, like we started explaining, are two things. First, for this liquidity fund to be the deepest liquidity fund, because its purpose is eventually to provide liquidity for all these tokenized assets that are about to enter the Ethereum blockchain. And it's already started, and one of it is the bond market. This is exactly what Buidl token is about. It's tokenized US debt, it's tokenized treasury bills, it's tokenized bond, first of its kind on the Ethereum blockchain. So this is what will set this bull cycle apart from any other bull cycle. It will be an extension of a bull cycle, literally, because usually the bull cycle ends and the bear market starts. all the liquidity starts being removed from the market. Usually that's how it's always been. But now, once the bear market would start, these institutions now have an alternative to remain in the crypto industry on the Ethereum blockchain and purchase Buidl tokens, which are Treasury bills, and still remain in the crypto space. What happens if trillions of dollars in US Treasuries are being bought as the bear market starts? It has never been done before. And this is now something that will be very interesting, community, for us to experience, because this will now throw a lifeline to the Federal Reserves, and it will give them much more powder in the form of liquidity that they can literally print more money without major consequences. They can print more fiat without having to worry that they're going overboard, because now all these revenues that have been made by these institutions, whether through a Bitcoin ETF or Ethereum ETF, can now remain on chain, but they are now being used to purchase debts, US debts. This has never been done before. So this will be an extension of an extended bull cycle. So we'll have to see how this plays out, because it's never been done before and we've never experienced it before. And the second part also is that there's never been a full reserve digital national bank before either. Currently, the banks are all fractional reserve, meaning they have way less in deposits than they owe to the depositors. So if all of us would go and want to withdraw our deposits, that's what you call a bank run, and they don't have enough liquidity. And this has caused a lot of issues. And this is now going to be addressed through Circle, which is the issue of USDC. And they want to be the very, very first ever full reserve digital bank. And it's not by coincidence, because they are required to have a banking license in the first place, because they are stablecoin issuers. And now that a ban has been brought through the House, and the House has banned the Feds to issue a CBDC, a central bank digital currency, it's not going to happen. So that leaves USDC as the only so-called de facto CBDC. So USDC is going to play the major role in the US economy, in the global economy, digital economy also. And this is what we've been talking all about all along, is that we are going to experience a big rise of the stable coins. And they are going to play a major role. They're already playing a major role, but they're going to literally play even a bigger role now that everything is getting ready to be tokenized and be brought on chain. And the largest and first liquidity fund is from Blackrock, and they are pairing their Buidl token, which invests 100% in US bonds, US debts. That token is paired to USDC. That means that if Buidl goes to trillions of dollars, so will USDC as well, because liquidity is 50-50. That's how liquidity pools are created. So let's say the Buidl token goes to 10 trillion. That means we'll have 5 trillion of USDC and 5 trillion of Buidl token. So that puts it at 10 trillion market cap. So this is how it works. And this just shows you how USDC is going to play a major role in all these tokenized assets industry. And on top of that, because Circle is the USDC issuer and they are going to be the first full reserve digital bank, you can imagine all the transactions in the US and outside of the US, besides the BRICS nations, of course, are going to transact in USDC. And because USDC is already an established stablecoin issuer, and they already have applied and got pre-approved for the Euro stablecoin, they are literally also going to dominate the European market by being the first EU stablecoin issuer, because they already have millions of customers that are also trading in Europe. They automatically will also be onboarded, of course, and it will also establish Circle to be also the largest European stablecoin issuer in Europe as well. So we see that still strategically a US institution that is regulated by the US government is still going to dominate the European market as well, offering EU stablecoin. So what we're looking at today is that we achieved a major milestone in taking the bragging rights for Bitcoin, especially the Bitcoin maxis. They've called everything else outside of Bitcoin an S-coin. And now that Ethereum is also officially a commodity, considered a commodity. That bragging right is now shared between the two of them. This is something beautiful because unlike Bitcoin, like we said, Ethereum is a deflationary asset, deflationary commodity. It's multifaceted. It's being literally used for every transaction because it's a smart contract based blockchain. So as adaptation is coming to Ethereum and as the scaling becomes better and the transactions become cheaper, more users are adapting and jumping on to Ethereum. It will be extremely deflationary, and more Ethereum is going to be staked, obviously, because now institutions will want to benefit from the 5%. And the moment there's enough liquidity for Ethereum, and this will be the case because unlike Bitcoin, all the liquidity is in ETFs. That won't be the case with Ethereum because nobody wants to miss out on the staking part. It might become tricky because these institutions might opt to purchase US debts instead of staking ETH, like we just discussed, but that's not guaranteed because if you purchase Ethereum and spend hundreds of millions in it, obviously you don't want to lose on the more Ethereum that you get. And two things happen here. This will help Ethereum to literally generate tons of liquidity, not just through ETFs, which will only benefit the institutions, but especially on the blockchain as well. And this will benefit retailers, you and me. This will also help all the tokens that Ethereum is paired to and also the entire blockchain as well. BlackRock always makes the first move and then other institutions follow suit. And this is exactly what's about to happen too. As of now, the only liquidity fund on the Ethereum blockchain is through this Buidl liquidity fund from BlackRock. However, who knows, once these regulations are put in place, that all these APs are authorized participants, which are institutions, financial institutions such as Citibank, UBS, JP Morgan. Who knows if they start to issue their own stablecoins or they start offering staking capabilities to their clients. So we are very early on and we are still in the invention stage in this industry, meaning people are still tweaking, and trying to see what products they can bring on the market using the blockchain technology, using Ethereum specifically. And Ethereum is much more versatile. You can stake it, it's deflationary, and liquidity is being distributed not just on ETFs like Bitcoin is, but it's also being distributed on the chain itself. This is a major step forward for us community, and especially Ethereum, because even if Bitcoin goes to $1 million, it doesn't have a direct impact on us. However, if Ethereum is moving, is hitting 5,000, 10,000, 15,000 in price, it has a direct impact on us, because we are literally on the Ethereum blockchain. And this is really what's going to be a major catalyst for this bull cycle. Like we discussed earlier, once regulations are out and there's so much clarity like we are experiencing right now, and now that there is no guesswork anymore, it's now official, it's clear. The regulators have officially announced that Ethereum is a commodity now. We are about to see a lot of innovation now. A lot of projects have been put on hold, especially with the staking situation. We're about to see a lot of new changes, a lot of new use cases through staking. Especially we're about to see a lot of institutions, financial institutions, offer that because, again, institutions realized that cryptocurrency is extremely lucrative and you're not tied to the price alone, but rather the more liquidity you have, the more transaction fees you can generate. And also another lucrative aspect of cryptocurrency is stablecoin. We saw how USDT in one quarter alone had more than 4.5 billion in revenue. So we realized that this crypto industry is extremely lucrative. And if you can corner the market like JP Morgan is right now, they're the owners of all that Bitcoin, because BlackRock, Fidelity, ARK Invest, and all of them, they can't own Bitcoin. That's why they have to appoint an AP, an authorized participant in JP Morgan. They own that. So this just shows you how powerful JP Morgan is, because JP Morgan is the owner of the Bitcoins for not just BlackRock, but any other asset manager that they are the authorized participants for. Same thing is about to happen with Ethereum. Don't be surprised if you hear that JP Morgan is offering staking services for Ethereum on an institutional level. And this is what we're about to hit next. We talked about it fast in our community. So let's look out for that. Next thing we're going to hear is that JP Morgan is offering staking services in partnership with Blackrock. This just shows us what kind of a future that we have, community. And this is something that I just wanted us to really highlight and to understand that what impact really this Ethereum being deemed a commodity, what impact it has on us. We can't exaggerate enough what kind of an impact it has, the likes that we've not seen before, simply because liquidity is now not locked in ETFs like Bitcoin is, but it will be brought on chain as well. And also because of Ethereum, we'll experience an extended bull cycle, because now profit taking will not be removed off chain anymore, because BlackRock now tokenizing bonds, it will give these individuals an alternative to always just switch from bull cycle to bear market. So if the bear market starts, they purchase US debts. It's more secure, it's not volatile. And then once the bull market starts, they sell US debts and start buying cryptocurrencies again, such as Ethereum or Bitcoin. And mainly Ethereum, because like we say, it's a more attractive alternative for institutions. And this is a whole different ball game now, that institutions, they have so much funds sitting around, they usually don't know what to do with it. Now they don't have to wait for bull cycles. Now they can make money during the bull cycle and during the bear market. Now they can purchase US Treasury bills, US debts during the bear market. And then once the bull market starts, or before it starts, they can now use them funds that they purchased and flip it again and purchase Ethereum. So they'll be earning dividends year round. And this is what Ethereum blockchain is offering, that institutions will now be able to generate revenue in the form of tokenized treasury bills through the Buidl liquidity fund of BlackRock, which is on the Ethereum blockchain. And during the bull run, they'll turn around and purchase Ethereum itself and stake Ethereum. So this is something brand new that has never been done before. And these are the differences and these are the benefits that Ethereum offers institutions that Bitcoin is nowhere near it. And this is what makes Ethereum a much, much better alternative investment than Bitcoin. And also it's more attractive for retailers as well. It will force institutions, not just retailers, to literally buy Ethereum. Because if institutions are not staking, it's the retailers, it's us that will be staking, that will benefit the most from it. And Wall Street is definitely not going to pump our bags for us and not benefit from staking distributions. So this is why I'm saying next leg up, we'll hear that JP Morgan, who else, will be offering staking, ETH staking for institutional investors. And the beautiful thing about Ethereum is it has an unlimited supply. So meaning the staking will be unlimited. With Bitcoin, you can only mine for 100 more years until it hits that 21 million mark. Then you can't mine anymore. It will be done. But with Ethereum, the stakers will keep staking. And the longer you stake, the more you stake, the more ETH you get. And Wall Street is definitely going to get into this business because it will be extremely lucrative. Staking an asset class that is not just deflationary, but that is giving you dividends on a daily basis. It's extremely lucrative. And especially once it gets enough liquidity, it will be more stable. And the more adaptation it gets, the more deflationary it gets. That's the message for today, community. Just wanted us to really understand and appreciate the impact that Ethereum being deemed a commodity has on the industry. It will help Ethereum to literally flip Bitcoin. And once Bitcoin is flipped and Ethereum is the #1 cryptocurrency in the industry, we will be the first choice every time during bull cycles. We will be always the first to benefit from the Ethereum bull run.